It's about that time of day again here this morning. Welcome back, 7:35 Eastern Time, Monday through Friday, 7:30. We're back already, guys, with your crude oil morning prep. We're going from the screen to the floor this morning. My name is Joseph. Welcome back here for another edition. I'm from School of Trade. I'm just a little old technical analyst here in my home office in Los Angeles. I run a live trade room every morning with our members over at School of Trade. And this morning we're going to be working on a top-down approach, analyzing overnight, analyzing London, anticipating direction at the open, and of course my job today is to find us some high percentage trading opportunities. Now we have it pretty easy here as traders. What? Yeah, that's right. We got it pretty easy here as traders. We know the market can move one of three directions. Well, if you're trading crude oil, I guess it can move all three, right, in one trading session. It has a very, very interesting personality to it. We know that markets can move higher, they can move sideways, and they can move lower. So we have it easy. All we have to do is we have to prepare for all three. So this morning, we're going to use a technical approach to moving from top to bottom, moving from a slower time frame all the way to a faster time frame, looking for clues, and then finally anticipating the direction at the open and looking for those high percentage trading opportunities starting at 8 a.m. Eastern Time. Now, I've got a partner here with me. His name is Marty, and he's from the NYMEX Exchange. I'm here in Los Angeles. Marty's in New York City. We're going to go all the way across the country, going from my screen to the floor. Marty is a specialist at giving us the pit analysis every morning, and he's going to be talking about market direction, looking at different market divergences, market internals. He'll take a look at the options that are trading in the pit, and of course, he'll look at today's pit session price levels. A very, very important and very unique way of looking at this, moving from the screen to the floor. Now, you guys didn't come here to listen to me talk all morning, so let's jump into some charts. First thing I want to do is I want to grab a daily chart. And the daily chart this morning, we don't often look at dailies during the week. I'll usually look at them Monday, Wednesday, Friday, Mondays and Fridays, stuff like that. Remember, kiddos, if you're following along at home, daily charts are only setting the stage. A daily chart is going to tell a story of what is leading up to today's price action. What has happened over the past few days is likely to bleed over into this morning's price action. In other words, if we've been bearish for the past 2 days, we can expect this day to also be bearish if there wasn't anything in our way. This morning, what are we seeing? Let's look at this daily chart here real quick. You'll notice I circled the area I'm going to talk about, and we're going to zoom in and look at these candlesticks. Now, looking at these candlesticks this morning, you can see here that we have big wicks at the bottom, and they're both shaded green. This, of course, is after we made that huge run up as we went into the end of the week last week. We peeled off it just a little bit, and of course, it appears that we're getting a double take here back to the highs, right? That's what it appears is happening right now. The big wicks, the green candlesticks, we move up, we push off, and we're trying again. Now, what this tells me is, this daily chart tells me that the look and feel of this market appears to be bullish. Now, that's only just a taste. This is just one of the first breadcrumbs we're going to look at as we start moving our way faster and faster. Now, I'm going to skip all the way down now over to a 60-minute chart. And I want to skip all the way down now to a 60-minute because this bullish sentiment, this bullish feeling, let's move over now and take a look at what we're dealing with here on a little bit faster time frame. Here's a 60-minute chart. Now, on this 60-minute chart, you may have remembered yesterday's video, right? Remember yesterday's call, we talked about that bullish channel, and we talked about how we were going to buy the lows yesterday morning. Boy, was that accurate. Everybody in our trade room made a killing yesterday on crude, and I hope you guys did too. As you can see here, we have successfully tested the lows of that channel, and now we have a little bit of a different look to this channel now. This is very interesting. The interesting part about this 60-minute, this would be an hourly anchor chart, is that, well, I can see three big things. The first thing is clearly this bullish channel. The bullish channel is not going anywhere anytime soon. It definitely looks like we are in store for longer-term higher prices. First clue is bull channel. Second clue, you can probably see it already. The second clue is the price wedge. Lower highs, higher lows. What does a price wedge tell me? A price wedge tells me that we have a little bit of indecision. Possibly we're going into some major news later on in the week. Possibly we have a summertime slowdown. Possibly there are fewer people that know exactly what they want to do with their direction. What does that mean? That means that there might be something that investors or speculators are waiting for out there in the marketplace. Maybe we're ahead of news. Maybe we're ahead of, quadruple witching week next week. Maybe we're ahead of some major news later on this week. It's tough to tell exactly why this is happening, and that's why as traders we remind ourselves not to worry about why things are happening. Just notice when they're happening and trade the reaction to them, right? By the time we figure out why, it's usually a little bit too late. So we know this morning that we have a wedge, and that wedge is going to, in my opinion, most likely spoil the party for the buyers, right? You can almost hear the record go, right? And all of a sudden these buyers now have something to work with. They have something to work through. We have the high of this wedge. This is a big deal. This is going to make our buying opportunities a little bit more challenging today. What do I mean by that? Well, oftentimes what happens when you deal with a bullish channel like this, and then you've got a price wedge, is that while price is moving higher, let me see if I can draw this up for you guys here. While price is moving higher, it's going to have a tendency here to what I call yo-yo, which means we've got the price wedge, of course, but price is going to try to keep moving higher. It's going to get smacked down. Move higher, smack down. Move higher, smack down, right? It's almost that 10 ticks higher, 20 ticks back down. 10 ticks higher, 20 ticks back down. So that's likely what the personality is going to be this morning if we do move higher. Obviously, with the bullish channel, we know the higher percentage trades are supposed to be long this morning. Buying pullbacks, buying at support. But this darn wedge, this trend line overhead, I think is going to make for a little bit of a difficult job, right? I think we're going to have a little bit of a difficulty moving higher this morning. What that tells me is I'm going to be careful not to buy the wrong pullbacks. And if you're a member of mine, we'll be watching this in real time. If you're not a member of mine, the term I would use is market personality. We're looking for higher highs, higher lows, great speed. If I'm reading tape, I'm looking for more buyers than sellers. I need to see huge signs from those buyers. If I'm going to be buying long this morning, it's going to have to really push strong. And I've got targets above me at 95.83 and 96.15. Those numbers are 95.83 and 96.15. Those will be profit targets for the long side today. Now, as you know, crude oil tends to have its own personality, and it doesn't care what we think. So if it does start to run to the upside, that will signal that the sellers have given up, and I will continue to buy pullbacks on the way up to the top of this bullish channel. That will only be, though, if we notice an extremely strong personality to the upside today, which is possible with this bullish channel. I think, and this is the third big clue, I think the biggest clue we're seeing here is these wide open spaces. Now, you'll notice that we have a certain indicator here that I'm using which marks up the sell zones overhead and the buy zones below. Normally, when we see a price wedge, we've got no room. Normally, we have all this space is already marked up with levels. In this case, though, we have a relatively unique opportunity here. We have a very wide open space on this 60-minute chart. Wide open spaces, just like when I'm here in Los Angeles, stuck on the highway, right, and all the congested traffic, right, or if you're heading through one of the tunnels into New York City, right, all that congestion. Well, if you catch it at midnight, well, maybe not in New York City, but if you catch it at midnight here in Los Angeles, we got the freeway wide open, right, and we can just drive as we need. This is the same scenario. With this price wide open to the downside and relatively wide open to the upside, with the exception of this trend line directly above us, we have some wide open spaces here. So this wide open space tells me that it might be just as easy here to sell short this morning as it will be to buy long. So at the same time, the bullish channel telling me highest percentage trades are long, we can easily see here, though, if these sellers try to take this thing, we've got some easy opportunities here to get short this morning. So long-term trading, I'm looking to buy. Short-term trading, I'm looking to sell this morning. Don't forget, At any moment, one of these levels below us is going to act as major support, and we're going to get a price reversal. Now, let's take a look. I'm going to be selling short in the short term, but let's take a look at the levels that I'm going to be looking for in the long term this morning to get long this morning. I'm going to open up now a 5-minute chart. And on this 5-minute chart, let me see if I can find that here. I think I misplaced it. There it is right there. Let's now bring open a 5-minute chart. On this 5-minute chart, this is our VIP chart. And the 5-minute chart this morning tells us we've got lots of levels of support below us that we're going to use for that possible price reversal. Now, the ideal scenario is that I can get short with a slight jump up this morning. What I'd like to do is I'd like to see price jump up into our reversal zone, and then price collapses right back down in so I can get it short. As of right now, we're kind of lollygagging here. I don't know if you heard that term before, right? We're kind of hanging out here in the middle. I'd like to get us up into that range so I can get a short going here. If I can't get the short, I will look at a buying opportunity at 95.06, buying opportunity at 94.72. I'll tell you, that's the opportunity that I want right there. 94.72. That's going to be that big buying opportunity that is probably going to result in the big move higher this morning. So short-term selling opportunities here on crude, long-term buying opportunities. Now remember, price can move up, price can move down, and price can move sideways. Now what I'm going to do is I'm going to go through these levels to the upside here for you, and then I'm going to put this chart up on our blog shortly after I'm done this morning, so you've got these levels waiting for you for the rest of the day today. Overhead levels we have this morning, 95.66. We're going to start out here at 95.66. 95.66. That'll be my first pit stop on the way up, 95.66. Let's see if I can get that off that chart there. There we go. We got 95.66. We've got 95.95. Check out the previous high of day. Previous high of day here is at 95.86 as well. It's going to be a big, important number there. This reversal zone will likely be a decent reversal zone. If it's not, that's okay. We've got more levels above us. I've got a reversal level here at 96.22. I have 96.33. Of course, previous week high here at 96.39. Last but not least, 96.74 above. How am I going to use these levels? These levels are excellent. If I'm long, they make profit targets. If I'm long and I take profit, I will then look for a reversal. The way it's going to work is I'm going to look for my reversal first coming out of the reversal zone. That'll be the short trade number one. The second one here, if we end up going through it, I'm looking for, and you can see this whole area right here. This range right here is going to be a great location for a fake out breakout. Look for price to try to get up and then collapse and come back down. And again, if we happen to keep on going, I can buy a pullback above 96, take my profit off previous high of day. Prior week's highs will definitely be a magnet for price, so use those for a profit target. If we get above this 96.39, guys, above that 39s, I can also start buying pullbacks again up to 74. So I'm looking for reversals at each one of these levels above me. If price goes and breaks above it, and when I say breaks above it, I mean a candle closing above it, with a 5-minute candle closing above it, that's when I know I've got those sellers beat and I'm buying pullbacks on the way up. Those are my levels to the upside. To the downside here this morning, we are expecting to see quite a bit of support below me. This is what happens when you use a 5-minute chart with a 60-minute chart that has that bull channel and has all of that support waiting for us below. Let's take a look at the levels below us now. Now, as we move lower in the short term, if we do not make a new higher high, if we make a new higher high this morning, these numbers need to be recalculated again, okay? So we got to stay right where we are right now, 95.06, 94.92. I'm going to discount this area here and look for 94.72 and 94.60. That's my sweet spot right there. That will be an ideal location for the buy today. It doesn't mean that I can't take the long off the 95.06. It just means that I'm really going to be excited if we blow right through it. Give me a chance to buy here now at that 94.72. The reason I say that, I've got some daily levels over here. These are daily projections, 94.85, 94.66. So you can see these are going to blend right in with each other. I think the short term is going to produce price moving through it right? But at the same time, we may not get it all the way down to that 94.72. Just be aware, we do have a big buy zone here waiting from the daily chart, 94.39, 94.22 as well below. So as we move lower here, guys, I am expecting to see a bounce. I'm hoping to get the bounce off 94.72-ish area, right? That's some daily levels, and we have this morning's levels. We also have the low of day and the reversal zone. So again, use these areas for price reversals. You are insane to be trading short as we go into this bullish reversal zone. If we keep on pushing lower, we have trend lines. Trend lines. Guys, this is going to be very, very difficult for these sellers to break these trend lines this morning. We have the previous low of day at 94.04. I've got 93.91 for a reversal level. Another previous low of day at 93.80 and another one here at 93.50. We have a ton of buying opportunities as price goes lower. It makes perfect sense. It makes perfect sense here as we go lower. We're going to see lots of areas here to buy. Now you might be saying, but Joe, we've got 1, 2, 3, 4, maybe 5, possibly if you go all the way lower, 92.83. If we really get on a tear to the downside today, 92.83. Joe, how do we know which one of these levels to the downside we're going to use? We don't. All we know is we're going to know where the levels are, and once we see a reversal bar off those levels, then we know we got the price reversal waiting for us. Guys, I'm looking at short-term selling opportunities, long-term buying opportunities. We know it's going to be a little bit higher risk, a little bit more challenging to get long in the short term, but remember that daily chart. If we break above that trend line on the daily chart, which I've posted already on our blog this morning, that daily chart's already been posted for you. Head on over, check it out, and you guys can see today's levels there. I will be updating this chart here momentarily, but you can see they're all there posted for you. Make sure you're careful to the upside this morning, and don't forget one last thing. Today's a Wednesday. What do we have on Wednesdays? Crude oil inventories. Be careful to the upside this morning. Be patient out there. Now, let's see what I've got. Let's see what Marty's got going on his end. Now, Marty's been getting ready on his end. He's got his game face on. Let's take a look at what Marty's seeing here on the floor of the NYMEX. Marty, how we doing out there, my friend?
Well, good morning to you, JJ. Good morning to you, ladies and gentlemen. And we've been just getting out my sheet here. Just give me 1 second here. I'm just getting out my sheet, and we're going to take a look at some levels here for you guys. So, ladies and gentlemen, what we got for you here is just, wow, oh, wow. We had our numbers hit the board last night, the API numbers, and what that brought for us was a little bit of a mixed reaction. If you can see, really, crude hasn't really picked a direction yet. Of course, we saw a build in outright numbers in the crude API numbers. Again, these API numbers are used as our leading indication on the DOE EIA numbers that are coming out at 10:30. So the API numbers, they showed us a 8.9 million barrel build in crude, so quite a significant build. But in Cushing, Oklahoma, they showed a draw of 768 million barrels, so that is kind of promising in terms of bullish activity here. So 768,000 barrel draw in Cushing. Gasoline, they showed a build of 1 million barrels, and in distillates, they showed a build of 199,000 barrels. Well, the divergence here is traders come to their desk at 8 a.m. this morning. They're looking at a little bit of a bullish sentiment. Again, traders are watching these Cushing numbers more than the outright numbers that we've been watching for crude. So the Cushing numbers, even in today's number, is going to be very important to watch out for. So most traders are talking to me about levels, and they're looking for opening bell print for at 9 o'clock above 95.25. If we can get above that 95.25 and stay above 95.25, and that's kind of yesterday's settlement number as well, we can expect to see a test of the high end of this range. So we look at RBOB, we look at heating oil this morning, and we look at our multiple market divergence, and what I got here is your RBOB just trading a little bit higher, as well as the heating oil and crude. So we all know RBOB, crude, heating oil, they all trade in the same pit. These markets tend to follow each other, so it gives us a wonderful divergence to the upside. So when you see RBOB and heating oil making new highs, usually crude follows suit. Crude is a little bit of a lagger opposed to RBOB and heating oil, so we use RBOB and heating oil as our leading indications on crude because they all trade in the same pit, and these products move in line. If not, they lead crude and crude lags them. Well, this morning here, your RBOB trades at 288, 282.12. Once again, that's 282.12. A little bit higher, coming up on yesterday's high of 282.58. Again, yesterday's high in the pit session was 282.58 on the RBOB, and we're almost there, just about a half a penny away from them. Now we look at the heating oil. Heating oil is trading right now at 287.70, and the high from yesterday was up at 286 even, so we already exceeded highs on your heating oil. Let's look at volatility as we always do. We like to look at vol, and vol this morning on the implied volatility for crude oil is in quite substantially this morning by about 1.5 vol from yesterday's settle. So volatility, implied volatility, 20% even. Now, as we spoke earlier, when the volatility comes in, right, there's lower volatility in the higher strike levels above. So the thing is now, this lower volatility is supporting this little bit of an uptick that we're having right now. So we're going to have to watch volatility on the opening bell. The OVX, yes, it did settle the day, ladies and gentlemen, at around 2180. That's right, 2180 is where we settled the day on the OVX. But as I mentioned, the implied volatility sits at about 20%. Vol index and front vol are just about 20% as well. This morning, open interest currently stands at 181,247 in July contract. Over in the Augie contract, open interest currently stands at 207,175, and it looks like to me that shorts are squeezed out here as we are kind of coming in just a bit on open interest. Now keep in mind, we are in the middle of roll right now in the pit. All the pit traders on the 5th to 7th business day of the month, they start to roll all the way to the 10th business day of the month. So they're going to be rolling all the way till about Friday, and that's when a lot of the pit traders make their money. So we will be expecting a lot of roll activity in the pit today. We have been watching really just paper in somewhat of a net long position here, just paper very long-sided here. They haven't taken off their positions every day. As we would look at the pit chart, you'll see that you don't get that really big downtick here towards the end of the day that we usually tend to see, a reversal, if you will, into the end of the day. Yesterday they came in buying into the close, and paper was pretty much long-sided, as I mentioned. Locals, of course, they take off their positions in a nickel and dime the market as usual. Real quickly, just proceeding on again, we looked at the open interest, we looked at the volatility. Now, really quickly, let me look at the Brent crude and the spreads, and then we're going to go over levels here. So your Brent crude this morning, ladies and gentlemen, trades in the August contract now. Okay, the Brent July contract is off the board tomorrow, so we already rolled in the Brent. Now the Augie contract trades at 103.36. So Brent has been trading higher, holding levels above 103. The Brent WTI spread, we're going to look at the Brent WTI spread. We're going to look at Augie to July and Augie to Augie and the Brent WTI spread. And now that Brent WTI spread is trading on the Augie, of course, Brent, July crude at 777. And right now we just look at a little bit of backwardation in the spread, but mainly unchanged. So what does the spread mean? When the spread tightens up, crude trades higher. When the spread widens out, and that's called backwardation, it trades lower. So when there's contingency in price, when prices are in contango and they tighten up, net change is negative on the day, crude trades higher. And when the spreads end up widening out, backwardation, that means the crude will trade lower. So right now we're in a bit of a mid-range trade. So really not seeing much here in terms of spreads. Again, a little bit of an actual bearish hint in the morning to these spreads, believe it or not. So let's look at calendar spreads as well real quickly. Then we'll look at levels, ladies and gentlemen. Again, your calendar spreads. We're looking at your outright crude calendar spread. July to Augie is currently just at about an inverse of 22 cents. Once again, inverse of 22 cents on July to Augie. It's unchanged on the day. We look at now your July to SEP right now, July to SEP contract, inverse of 28 points on the day, 28 cents. And right now it's basically unchanged as well on the day. So both front month spreads are giving us a little bit of a mid-range trade, unchanged. No clue yet from there. And now, guys, we look at that July to OC contract, and that's giving us just a little bit of a contango in price. Again, it's kind of tight this morning by about 10 cents or so, and we're looking at a carry of 03 on that spread. And that's giving us that little bit of a bullish hit that we're having right now above those 95 quarters. Again, I'm a half bit at 80 right now. All right, guys, let's talk real quickly now about levels here this morning. Okay, yesterday's pit session levels, we have 95.50 was your high in the pit session for crude. Your low, 94.04. Once again, that's 94.04, your low. We close and settle the day at 94.26, 95.26. 95.26 is where we close and settle the day. Again, we're looking for that opening print above 95.25. So we close and settle at 95.26, so that's promising. Net change of 52 cents on the day to the upside, about a $1.50 range. No break even for gamma scalpers at home, so they weren't able to break even yesterday, and they weren't able to cover the daily theta. They were able to do it in the morning, but not so much towards the end of the day. Volatility yesterday was 22%, as I mentioned. The OVX closed and settles at 2181. Right now, implied volatility is at 20%. So you can see the difference between. Resistance above, I got 95.82, which we are almost about to breach. Again, we're getting awfully close to it. Once again, 95.82 is your level of resistance above. We also have 96.38 and 97.85. Support down below, 94.36, which we can be buying, 93.47 and 92.01. So again, that 94.36 is going to be a nice little bit as well as yesterday's low as well. So if we get below those 94 evens, we will be bearish. If we stay above those 94 evens and we stay above these 95 quarters, we could be bullish. And again, all eyes on numbers here today. We're looking for crude to show a draw of 1.4 million barrels. So if they come in anywhere close to what the API numbers were last night, that would be very bearish on crude because of the build. But the Cushing numbers are what we have to watch. Again, they're looking for a draw of 350,000 barrels in Cushing for expectations. So anything above that, we'll be selling. Anything below that, we'll be buying. Very simple. So we saw builds in commercial crude oil inventories numbers last night, and the Cushing was a draw. And those are your forecasts for today. Guys, in the pit, we saw 94 halves, 95 halves, and 100 calls trade over 3,000 times each strike level. And then on the put side, we saw those 94 puts 4,000 times, and the 90 puts about 5,000 times. So you can see kind of neck and neck in terms of skew on options and what levels they place their money in. But again, they're still buying those 95 halves, above 95 half, and they're also placing money in that $100 call. They also buy Augie 102s as well. And then on the put side, as I mentioned, they buy Augie 88s, and then they buy July 90s and July 94 puts. So again, below that 94 buck level will be a little bearish, and above that, we stay above it, we'll be bullish. All right, guys, natural gas real quickly here. High yesterday, 382.20. Low, 272.20. We closed and settled the day at 372.40. Net change of 4 pennies to the downside, a 6 cent trading range. Again, a 6 penny trading range, which is 60 ticks. Daily pivot today, 374.30, which we are trading below at the moment. Volatility 30%. Let's talk about some resistance above. I got 376.40, 380.30, and 386.30. Support down below, I got 370.40, 368.30, and 362.30. As we are now wrapping this thing on up, ladies and gentlemen. Again, I'm going to throw it back over to JJ at 8:05 on a Wednesday morning here, June 12th, 2013. And I'm going to throw it back over to JJ. And then, ladies and gentlemen, what I'm going to do is see you guys all in just about 45 minutes for the top of the broadcast here in the pit session opening bell. Have a wonderful day.
Thank you so much, Marty. As always, great job this morning. Thank you very much for your feedback here, and thanks for your time this morning. Guys, as always, we love having you guys here every morning. Thank you for coming in and watching. Thank you for tuning in. And thanks for sending us your feedback. We are working hard right now to roll this out as a full-time product in the very near future. Currently right now in beta, and we're hoping for a July 1st release of that final product. So send us your feedback. We'd love to know what you guys like and what you don't like about the broadcast, and we'd like to invite you guys to come out and see us again. We'll see you guys in 23 hours and 30 minutes from now for a Thursday morning edition. Now, don't forget, today's a Wednesday. It's not a wacky Wednesday. That'll be next Wednesday, but it's going to be a little bit wacky with crude oil prices pushing higher into that top of that price wedge we talked about earlier. And don't forget, you've got inventory numbers at 10:30 this morning. Guys, don't forget, you got to learn it so you can earn it. I'm JJ at School of Trade. That was Marty at Traders Audio. We'll catch you guys here tomorrow morning, 7:30 a.m. Adios, amigos. Bye-bye for now.